Hey everybody, welcome back to the channel. So today I thought I'd give a quick update on the first week with my Forex Funds $200,000 challenge. This is not for me to say how good I'm doing or how bad I'm doing. It's more a case of the thought process about how we actually tackle these challenges and what I'm thinking, because often the same thoughts that you'll be having if you're going through the same challenges. And I know most people do struggle. I've seen from the stats of the polls I've done in the past, a lot of people are struggling to actually pass the challenges. So really I think it's a good idea just to talk through what I'm doing and how my thought process changes about this challenge from the ones previously. Now I usually approach the challenges on a very low risk mentality, get into it very slowly and build up towards the end. And often a lot of challenges have actually gone my way in the first week, and then towards the second, third week it's gone against me. And I'm in that point of struggling, thinking, okay, do I just go and get another retake? But I've done so many challenges now, I want to really get much more proficient and actually passing them first time without having to go through retakes. So this one I've changed it around slightly. Again, I wanted to get a bit of a buffer in the first few days just to make sure that if I was going to get into a trade, the psychology doesn't always kick in and thinking, okay, I'm down, I'm in a negative. So I put a bit of a swing trade on. So going back to the start, I was buying the euro dollar just on a premise that it had been very, very low, down below 1.05, that close down to 1.04. If I start buying at that level, if there's some momentum, because the dollar is very strong, I can get a bit of a, just a bit of a head start or a bit of a kick. And that's also one of my rules when I start the challenges. What can I do to actually get a bit of a challenge? Is there a swing trade I can get onto that could potentially make 3, 4, 5%? Now, as it turned out, this one didn't make a massive amount. I did actually close it out after about the second day. And also it corresponded with me not being at home for a few days, being out in the office and not being able to monitor the trade. So in some ways it was actually quite nice to close it out. But I came in sort of Thursday ready to really attack the actual charts and got in some much better trades. So from the swing trade I was up just over 1%, nothing dramatic, nothing really to shout about, but again I want to use that as a launch pad. So rather than going in and looking at risk around about 0.25%, I was going in full on 1% risk from the start, knowing I had a buffer to start with. Now, as that day started off, I had actually had a losing trade. I actually back down just over 1%, but I wasn't deterred. I was still ambitious enough to go for those trades, still sort of doing the logic, the process, and did actually get into a fantastic short on the FTSE, which would have actually, looking back in hindsight, if I just left it in place, would have hit almost the 8% profit target I would have needed to have done. As it turned out, I actually closed that trade out at just about 3%, so not a bad return in the end. And that point was just waiting for another good trade to come along. But also in my mind, thinking that with the previous trade and that trade, I'm now close to 4% up. The mind starts to play games, starts to play tricks. You feel that you're halfway there, you're getting closer to the finish line. So your brain says, okay, I'll risk more or I'll do more trades. But reality is more trades, more risk is generally going to be worse off, and you get into 1 or 2 losing trades and you've blown everything. So for me, it's to hit that reset button again. What did I do in the first week and replicate through the second, third, fourth week if I have to gain momentum and keep pushing forward. And as we start fresh on a new week, I've taken that mentality of not losing the profits I've made, which can sometimes feel a bit negative, but if you're protecting that capital and protecting the actual gains you've made, you're far less risky going into a trade. You're going to think more about what you need to do to actually make some more positive gains, rather than just saying, okay, I've made 4% on 1 week, I can go and risk 2% or 3% on a trade, and before I know it, I've given that all back. So for me, yes, it's a slight negative point, but for me, it shows more of a respect to the money I've made and able to go through and actually reset that mind and just go and make good profits for the following week. And as it's turned out today, markets are crashing, everything is down. And often what I'd do in the past, I'd start buying when the market drops, buy the dip, hold that for a long period of time and hopefully get the good gains in the end. But in the back of my mind, I can see that it's going against the trend. There's obviously being a big crash. There's obviously recession globally kicking around. There's obviously lots of other news coming around where economies aren't doing as well as they should do. So I'm not going to be buying where I would normally buy gold or FTSE. I'm just going to let them just stay there and just tick along until I either get pulled back to a good area or I can see a continuation of a trend. Just wait and wait and wait. And it might be that I have to wait an entire week to get a good trade and a good setup. but I'm prepared to do that knowing I have the foundation of that 4% gain from the first week. And it is actually really hard just to sit on your hands and do nothing. You're always watching the charts and seeing price move around and seeing loads of red seller candles, all these bars coming, and think, okay, if only I'd sold here, if only I'd done this. And I can look back in hindsight and think, okay, I was in a gold trade beginning of last week. If I'd held on, I would have hit a target. I was selling FTSE. If I'd held on, I would have hit target. There are so many hindsight things I could go back, and that can actually get you down as a trader. If you're always thinking, if only I'd done this, if only I'd stayed in the trade, if I'd moved my stop loss to just break even and let it run, I can't let myself be detracted by those things. I don't think you should either. I think as traders, we should be focusing on what we have in front of us right here, right now, and everything in the past is in the past. That should be forgotten and just left alone. And that's how I'm tackling this challenge now. I'm still going in with my 1% risk. I'm not worried about what I did last week and what I'm going to potentially do next week. It's just what am I doing now and in the moment. And I think that's definitely going to pay dividend on this particular challenge. I'm looking forward to seeing if I can actually get the additional 4% I need to pass phase one, not in a fast time, but in a controlled, thought out process to actually get that is then repeatable on another challenge or in the phase two. Speed is not the problem here. I think we'd all go in with a massive lot size or a big trade and just get lucky on one particular trade. So fantastic, we did in a day in one trade. It's about the process and being true and disciplined to our beliefs in our trading and how we actually go about making money sustained over a long period of time. So hopefully that's given you a bit of thought process of how I'm actually tackling this challenge and what's happened in the past week. And it might give you a few pointers and thoughts of how you can change your possible mindset and mentality to go forward and pass these challenges yourselves. So as always, thanks for watching, and I'll catch up again soon. Cheers.